As of this moment, with the market actively trading, Tilray Brands Inc., trading under the ticker TLRY, is priced at $1.61, experiencing a slight intraday dip of about 0.5%. Now, the common perception, the immediate narrative that likely comes to mind for many who follow this space is that this is just another cannabis stock caught in the relentless chop of a sector that has consistently failed to meet its own hype. The expectation is a story of regulatory headwinds, cash burn, and a stock chart that has disappointed long-term holders. However, the reality of what's happening under the surface at Tilray is far more complex and arguably more interesting than that simple bearish narrative suggests. The company is undergoing a fundamental transformation, shifting its identity from a pure-play cannabis producer into a diversified consumer packaged goods company, a strategic pivot that the market is still struggling to properly price. This divergence between the lingering expectation of a struggling pot stock and the emerging reality of a diversified brand portfolio is where the real story lies. Most investors, especially those using platforms like Robinhood or Fidelity for their self-investing activities, view Tilray through the lens of a broader, beaten-down cannabis market. They see the headlines about failed legalization efforts in the US, the pricing pressures in the Canadian market, and the general sentiment of fatigue that has settled over the industry. The prevailing belief is that all cannabis companies are essentially in the same boat, waiting for a legislative miracle to bail them out. This expectation isn't entirely unfounded. The sector has been a minefield of volatility and broken promises. But to lump Tilray into this monolithic category is to miss the critical nuances of its current strategy. The company is actively building a moat, not just with cannabis, but with craft beer and wellness products, creating revenue streams that are not directly dependent on the whims of cannabis legislation. This is the contrarian reality that challenges the common ground. While everyone is watching Washington, Tilray is quietly building an empire in beverage aisles and European pharmacies, a move that could fundamentally de-risk its business model in the long run. Looking at the recent stock movement, the choppiness is undeniable. We've seen Tilray's stock exhibit significant volatility, with a 52-week range stretching from a low of around 36 cents to a high of $1.85. This tells you all you need to know about the speculative nature of the trading in this name. Daily trading volumes can be immense, often driven by retail sentiment and news flow, rather than institutional conviction. For instance, any hint of progress on the Safer Banking Act or rescheduling news from the DEA sends a surge of volume through Tilray and its peers. We saw a notable spike in interest and a price surge just last month, with the stock gaining nearly 29% in a short period, fueled by renewed optimism around U.S. cannabis reform. However, these rallies have often proven to be short-lived, as the market's enthusiasm collides with the harsh reality of a slow-moving political process. The reaction to their upcoming earnings report on October 9th will be a critical test. Analysts are forecasting a challenging year, with consensus estimates pointing to a significant earnings per share loss, even as revenue is projected to grow modestly. This sets up a classic expectation versus reality scenario. Will the market focus on the top-line growth driven by their diversified brands, or will the bottom-line profitability, or lack thereof, dominate the narrative? The institutional activity reflects this uncertainty. While some major players like Citadel Advisors have significantly increased their positions, others have completely exited, indicating a deep division among sophisticated investors about the company's future. This isn't a stock where large funds are uniformly piling in. It's a battleground. You have hedge funds making speculative bets on regulatory catalysts, while more conservative funds remain on the sidelines, wary of the persistent unprofitability and regulatory overhang. For anyone engaged in online investing, this institutional tug-of-war is a key indicator of the stock's risk profile. So, what does Tilray actually do? The company that exists today is the result of a major 2021 merger with Aphria, which created one of the largest cannabis companies in the world by revenue. Its business is now segmented into 4 key areas: cannabis, distribution, beverage alcohol, and wellness. The cannabis arm is what everyone knows, with a significant presence in the Canadian recreational market and a strong foothold in the European medical cannabis market, particularly in Germany. This international exposure is a key differentiator. The distribution business, primarily through its German subsidiary CC Pharma, provides access to a network of thousands of pharmacies, a valuable infrastructure for when and if cannabis regulations evolve further in Europe.
The most significant and perhaps most misunderstood part of their strategy is the push into beverage alcohol. Through acquisitions of brands like Sweetwater Brewing Company, Montauk Brewing Company, and Breckenridge Distillery, Tilray has become a major player in the U.S. craft beverage market. This isn't just a side project. The beverage segment now generates hundreds of millions in annual revenue, providing a stable, non-cannabis-related income stream. The wellness division, anchored by Manitoba Harvest, offers hemp-based food products, tapping into the broader consumer trend towards plant-based health products. This multifaceted business model is designed to achieve two things: generate cash flow now from legal and stable markets like beer and wellness, to fund the cash-burning cannabis operations, and to establish a brand presence and distribution network in the U.S. that can be leveraged for cannabis sales upon federal legalization. It's a long-term play, and one that requires patience and a tolerance for near-term losses. Past performance has been a painful lesson for early investors who bought into the initial cannabis hype. The stock is down significantly from its all-time highs, a stark reminder of the dangers of investing in a nascent and highly speculative industry. Looking ahead, the future of Tilray stock hinges on several key catalysts and risks, framing a tense dynamic between expectation and reality. The primary expectation, the one that drives every major rally, is U.S. federal cannabis legalization, or at the very least, significant banking and tax reform. If the U.S. market opens up, Tilray's existing infrastructure in the beverage space gives it a theoretical advantage. The ability to leverage its distribution network and brand recognition could allow it to quickly become a dominant player. The international market, especially Germany's move towards broader legalization, represents another significant growth avenue. The company is well positioned to capitalize on this, given its established medical cannabis operations in Europe. Another potential positive is the continued growth of its beverage alcohol segment. If Tilray can successfully integrate its acquired brands and drive organic growth, it could create a powerful, profitable business that stands on its own, regardless of what happens with cannabis. This is the bull case, the reality that investors hope for. However, the risks are substantial and cannot be ignored. The reality could fall far short of these expectations. The biggest risk is the persistent uncertainty of U.S. federal cannabis reform. The political landscape is unpredictable, and a clear path to legalization remains elusive. A failure to pass meaningful legislation in the near term could lead to another wave of investor disillusionment, pushing the stock back down. Another significant risk is the company's profitability. Tilray has a history of posting net losses, and while it aims for positive free cash flow, achieving sustained profitability in the competitive and low-margin Canadian cannabis market is a monumental challenge. The debt load accumulated from its acquisitions also presents a headwind, particularly in a higher interest rate environment. Competition is also fierce, not just from other cannabis companies, but from the entrenched players in the beverage and wellness industries. Integrating a diverse portfolio of brands is a complex operational challenge, and there's no guarantee of success. Investors using platforms from Fidelity Investments to Interactive Brokers must weigh this complex web of factors. The average analyst price target is a mixed bag, with some seeing upside while others project a decline from current levels, reflecting the deep uncertainties surrounding the name. Before we move into the final analysis, I want to hear from you. Comment below and let me know, do you believe U.S. federal cannabis legalization will happen within the next 2 years? It's a critical question that will undoubtedly shape the future for stocks like Tilray. In summary, the story of Tilray Brands is a powerful illustration of the gap between market expectation and underlying reality. The market largely sees a struggling Canadian cannabis company, tethered to the fortunes of a volatile and unpredictable industry. The stock's price action reflects this narrative. It's a high-beta, news-driven security that trades more on sentiment and regulatory hopes than on fundamental performance. The deeper reality is a company in the midst of a strategic overhaul. It is attempting to build a diversified consumer goods powerhouse, using the stable cash flows from its beverage and wellness brands to fund its long-term ambitions in the global cannabis market. It's a long-term play, and one that requires patience and a tolerance for near-term losses. The challenge for investors is to look past the simplistic cannabis narrative and evaluate Tilray on the merits of its diversified strategy, its execution in the beverage market, and its ability to navigate the complex regulatory environments in which it operates. Whether the reality of this transformation will ultimately exceed the market's currently subdued expectations remains the central question, and its answer will determine the long-term trajectory of Tilray's stock.